SpaceX's public debut is the largest of its kind, scaling a private aerospace venture into a global market giant in a single day. By issuing 555 million shares at $135 each, the company's market value reaches a projected $1.8 trillion. At this valuation, SpaceX instantly jumps into the top tier of global companies, exceeding the market cap of even Tesla. Investors acknowledge these numbers are high in the short run, yet they're buying in anyway. They aren't trading on quarterly results. They are paying for a piece of long-term history. Sentiment is high, fueled by the observation that while domestic sectors are struggling against international competition, the U.S. is clearly leading the race in space. CNBC's Jim Chanos described the deal as a perfect A+, framing it as a way for the average investor to own a portion of Elon Musk's broader vision. However, this enthusiasm masks a difficult reality on the balance sheet. The company is currently spending far more than it earns. Investor Jim Chanos warns that SpaceX is trading at 110 times its revenue, a multiple he views as a troubling sign for the broader market. This side-by-side comparison shows the scale of that disconnect. Tesla currently trades at about 14 times revenue. SpaceX is asking for nearly 8 times that valuation. This mathematical gap raises a choice. Either this is a new standard for tech valuation, or a speculative bubble reminiscent of the dot-com era. To find the one financially viable part of the business, you have to look away from the rockets and toward the Starlink satellite network. Starlink is the company's financial engine, providing internet connectivity and generating roughly $4.5 billion in profit. Contrast that with the core launch division, which posted a loss of over $650 million in a single year. Much of the company's future depends on Starship, a vehicle that has yet to achieve Earth orbit and has a history of high-cost test mishaps. Outside of Starlink, the majority of the company's revenue relies on maintaining a monopoly on heavy launch contracts for the U.S. government and military. Underneath the futuristic branding, the exploration wing is a financial drain, subsidized by global internet service and government defense spending. The most recent addition to this $1.8 trillion valuation is xAI, an artificial intelligence firm folded into SpaceX just months ago. This waterfall chart shows the impact. xAI is projected to lose $6 billion in 2025, effectively negating Starlink's profits. Skeptics note xAI recently shifted from high-margin software toward a neo-cloud strategy, leasing server capacity to other companies. While this is a lower-margin business, it allowed the company to include a much larger total addressable market in the IPO filings. The inclusion of xAI appears to be a strategic mechanism to help justify a $1.8 trillion valuation that traditional aerospace metrics could not reach. Given the 110 times revenue multiple and the massive losses in AI, why are investors still buying? Investors are pricing in the Elon Premium, the belief that current accounting is irrelevant when betting on the world's leading innovator. For many retail buyers, these shares function as a long-term lottery ticket on Musk's ability to turn science fiction into a viable business. Ultimately, the valuation is a measure of absolute faith in a single individual, untethered from standard financial gravity. The governance structure of the new public company ensures that this faith in Musk is also a legal requirement for shareholders. The public is buying Class A shares, which provide 1 vote for every share owned. These are separate from the Class B supervoting shares held by management, which grant 10 votes per share. Musk retains 82% of the total voting power. Legally, he cannot be removed as head of SpaceX without his own consent. This means the public is assuming the financial risks of the company's moonshots, while having no operational authority over how they are executed. In this new era of investing, shareholders aren't just buying a piece of a company, they are writing a $1 trillion blank check to a visionary they cannot fire.